This is the IUX Education Podcast, your shortcut to smarter trading and investing.
Where complex markets become simple. Let's dive in.
Welcome to the Deep Dive. This is where we take your questions, your insights, and really try to unearth the critical knowledge you need.
That's right.
Today we're tackling something fundamental, a question lots of traders wrestle with. You might be wondering this yourself.
Yeah, what is it?
Is a single, really high-quality trade actually better than making many trades?
The classic trading riddle. I hear this one a lot. It's tricky, isn't it? Patience versus action.
Exactly. You hear about being disciplined, waiting for that perfect moment. But then the market's always moving, right? So maybe more trades mean more chances.
Well, we've looked through the notes and thoughts you shared with us, and let me tell you, it's definitely not a simple yes or no. It's pretty nuanced.
For sure. It's not just comparing apples and oranges. It's more like asking if, one perfect prize-winning apple is always better than a whole basket of consistently good, smaller oranges.
Good analogy.
So our mission today is to cut through the noise. No jargon, just clear, actionable stuff for you.
Right. Figure out when quality wins, when quantity might be the key, and crucially, what quality even means for your trading.
Okay, let's start with the quality argument. Some call it the patient sniper approach.
The sniper. Okay, I'm listening.
Yeah, and it's more than just a cool name. It's really a philosophy. Think discipline. Think extreme precision. Imagine that elite sniper. They're not just shooting at anything that pops up. No way. They might wait for hours, maybe even days.
Wow, days.
Could be. All for that one single unmissable shot where every single variable lines up perfectly for success.
Okay, so applying that to trading.
Right. In trading, this means you're laser focused on what we call A-plus setups.
A-plus setups. Heard that term.
Yeah, and most people following markets know it. But here's the key insight. An A-plus setup isn't just a good trade, not even close.
Okay.
It's a trade that perfectly matches every single rule in your personal, carefully built trading plan.
Every single one. That sounds demanding.
It is. We're talking about everything aligning maybe specific indicators, news runs, market mood, volume, whatever your plan says needs to be there.
Gotcha.
And here's something often missed. For many pros, these true A-plus setups, they might only show up a few times a week, sometimes even less.
Really? Only a few times?
Depends on the strategy, of course. But yeah, a lot of overtrading actually happens because people sort of dilute their own definition of what A-plus really means,
Wait. So it's not just about getting a good feeling about a trade. It has to tick all the boxes on my specific list.
Exactly. Your list, defined by your plan.
Okay, but how do you even define A-plus then? Because if my rules are too tight, maybe that perfect setup never actually comes along.
Yeah.
Or I hesitate and miss it. Isn't that a cost too? Like the opportunity I missed?
That is a really sharp question. Yeah, that's a real risk. It's a balancing act.
Right.
Your criteria can't be so strict they never happen, but they also can't be so loose they justify any random trade. It's something you refine over time with experience and review.
Makes sense.
But when you do commit to this quality first mindset, the benefits are huge. First one, way less emotional strain.
Oh, I can see that. Fewer trades, less stress.
Totally. Studies actually show traders making fewer, more deliberate trades have lower stress hormone levels, like cortisol, during trading.
Interesting.
It's not just about feeling better. It leads to clearer thinking, more rational decisions when it really matters. Helps avoid that burnout so many traders face.
Yeah, burnout is real.
And let's be honest, sometimes just not trading, resisting that urge to click the button when it's not quite right, that can feel harder than placing the trade itself.
So true. Choosing your battles, not fighting every single skirmish, less screen time, maybe more peace of mind.
Exactly, more peace of mind. And there's another big tangible benefit.
What's that?
Lower transaction costs. Every trade costs something, right? Spreads, commissions, they add up.
Okay, but are those small costs really significant enough? Do they make a big difference in the long run?
Oh, absolutely. They accumulate relentlessly. Think about it. Let's say you have a smaller account, maybe $2,000.
Okay.
And you're pretty active, maybe 200 trades a month. If each round trip costs you just, say, $1 in total fees.
That seems pretty low.
Could be. Depends on the broker and asset. But even at $1, that's $200 a month just in costs. That's 10% of your capital gone before you even make or lose anything on the trades themselves.
Wow, 10%.
Over a year, that's $2,400, more than your starting capital wiped out just by fees.
Ouch. Okay, I see your point.
Now, compare that to a trader making, say, 5 really high-quality trades a month. Even if those cost more per trade, maybe $5 each, that's only $25 a month in cost.
Big difference.
Huge. The long-term impact on your bottom line is staggering. Often it's the difference between breaking even and actually being profitable.
Wow, okay. That really puts it into perspective. I think a lot of people, especially starting out, just don't factor those tiny costs in properly. It's not just about winning more, it's about losing less to the process itself.
You nailed it. Preserving capital, both mental and financial. But hang on.
Uh-oh.
While that patient sniper approach sounds great, what about the other side? Those traders who seem constantly busy, lots of small moves, are they just being reckless?
Yeah, I've wondered about that.
Or is there something else going on?
And that brings us to the quantity argument, the statistical approach. This is where it gets really interesting.
Okay, statistical approach. Lay it on me.
So not all winning strategies rely on waiting for that one perfect home run. You definitely see traders who are super active, dozens, sometimes hundreds of trades a day.
Hundreds, wow.
And they're consistently profitable. This is the statistical approach. For some strategies, especially the really short-term ones like scalping, quantity isn't just helpful, it's essential. It's the engine.
So it's not random clicking?
No, not at all. It's highly systematic. They're exploiting a consistent but often very small statistical edge.
An edge, like probability.
Exactly. This whole approach hinges on the law of large numbers.
Okay. I remember that from stats class, vaguely. Right. The basic idea is if you flip a fair coin enough times, you'll get pretty close to 50% heads, 50% tails.
Makes sense.
In trading, if your strategy has a statistical edge, let's say it wins 60% of the time, on average, that edge isn't guaranteed over just 5 trades. You could easily lose 3 or 4 of those 5, right?
Easily. That would feel pretty bad.
Totally. It can mask your underlying edge in the short term, but over hundreds, maybe thousands of trades, that 60% win rate will start to show up reliably.
So you need volume for the math to work out.
Precisely. Take a scalper. They're not aiming for one big win. They execute their specific setup, their version of A plus many, many times a day, maybe just for a tiny profit each time.
Just a few pips, maybe?
Could be. They let that small probabilistic advantage play out consistently. If they waited for one perfect swing trade setup, their entire strategy would fall apart.
Wait, so you're saying if my strategy is only slightly better than a coin flip, like 55% win rate, I have to trade a lot for it to actually work reliably?
For that type of strategy, yes, absolutely.
That feels kind of counterintuitive to the A-plus sniper idea we just talked about.
It does seem like a contradiction at first, but it's about how you define A+ within each strategy.
Okay. Explain that a bit more.
For the sniper, A+ is that rare confluence of many major factors for a big potential move. For the high-frequency trader or scalper, A+ is different. It's about consistently spotting and acting on a smaller, very specific, repeatable edge or pattern.
Okay, so the quality is in the consistent application of the edge, even if the edge itself is small per trade.
You got it. The quality isn't judged by the size of the profit per trade, but by the discipline in executing the system over and over.
Okay, that makes more sense. But isn't there a risk of, like, developing bad habits?
Yeah.
Just clicking buttons without really thinking through each trade, relying only on the numbers? That sounds mentally tiring, too.
That's a brilliant point, and a huge danger with quantity strategies if you're not disciplined. Mindless repetition is definitely not the goal. A successful high-frequency trader's A+ setup is still incredibly specific. It has to be, but it's designed for rapid-fire recognition and execution. Maybe it's a tiny pattern on a 1-minute chart or a fleeting imbalance in the order book.
So still very defined, just faster and smaller.
Exactly. The quality comes from that disciplined, consistent application, not just hitting buttons randomly.
Okay.
And this approach, the quantity one, it's also better at capturing more opportunities, right? The market isn't just making a few big moves. It's constantly wiggling, offering tons of small fluctuations.
That's true.
A quantity strategy is designed to grab profits from those frequent little moves that a swing trader would just ignore, like fishing with a net for lots of small fish instead of waiting with a spear for one big one.
Nice analogy.
And there's another benefit, often overlooked, faster skill development.
How so?
Well, think about it. Making more trades means getting more immediate feedback. Constantly. It's like a supercharged practice session. You're honing skills like quick execution, making decisions under pressure, reading that fast price action. It builds muscle memory incredibly quickly. You learn to react almost instinctively in fast markets.
So it's like Practicing scales on an instrument. Loads of repetition, each note might be small, but doing it over and over makes you faster, more accurate, builds that fundamental skill.
That's a fantastic analogy. Yes, great question. That actually makes perfect sense. It's the disciplined repetition that builds that specific kind of proficiency.
Okay, cool.
So, we've looked at the patient sniper and the busy statistician. What does this all mean for you listening? Is one high-quality trade really better than many?
The big reveal.
The big reveal is, drum roll, please.
Yeah.
It depends.
I had a feeling you might say that.
It always comes back to this in trading, doesn't it? It depends entirely on your trading strategy and, just as importantly, your personality. There's no single better way for everyone.
Okay, so context is key.
Absolutely. Let's make it concrete. A swing trader, right? Someone trying to catch big moves over days or weeks. It would be totally foolish for them to try and make 50 trades a day. Their strategy needs patience, writing out the noise.
Makes sense.
Now flip it. A scalper whose whole system is about grabbing tiny, fleeting profits super fast if they only made one trade a day. They're not even doing their strategy. They'd miss everything.
Right, they wouldn't get the volume needed for their edge to work.
Exactly. The frequency, the number of trades, isn't a moral choice between lazy and active. It has to align perfectly with the specific method you've chosen and tested.
Okay, that makes logical sense, but practically speaking, for someone listening, how do I figure out which one I am? Am I a sniper? Am I a statistical powerhouse? What if I'm not sure what my rhythm is? That feels pretty personal.
It is absolutely personal, and honestly, that journey of self-discovery is maybe the most crucial part of becoming a trader.
So how do you navigate that?
It comes down to, well, honest self-reflection combined with systematic experimentation. Ask yourself tough questions, like, do I actually enjoy fast, intense action? Does that immediate feedback energize me or stress me out? Or do I prefer to step back, analyze things deeply, make a few careful moves, and then wait patiently?
Good questions.
Your natural psychology matters hugely. Your risk tolerance, how much time you can realistically commit, how you handle pressure. These are massive clues.
And I guess you might try one way and find it just doesn't fit.
Very often, people start down one path thinking, I'll be a day trader. Then they realize, through keeping a detailed journal and reviewing their trades and feelings, that it just doesn't suit their wiring. The key is being adaptable, being honest with yourself, and really listening to what the market and your own gut are telling you.
Okay, so it's an ongoing process of discovery.
Definitely. And that brings us to maybe the biggest aha moment from this whole deep dive.
Lay it on me.
The whole idea, the philosophy of quality over quantity trading. It isn't actually about a specific number of trades.
Not really. That's how it always sounds.
I know, it's a common misunderstanding. Its real meaning, the deeper meaning, is about making sure that every single trade you take, whether it's just one trade a week, or 5 trades today, or 50 trades in the next hour, that every single one is a high-quality setup according to your plan. It sticks rigidly to your predefined rules. See, it's not really about patience versus aggression. It's about discipline, intentionality, strategic alignment.
Okay, that's a subtle but really important shift in thinking.
Isn't it? The ultimate goal, no matter your style or frequency, is to just eliminate the garbage trades.
Garbage trades.
Yeah, the random ones, the impulsive clicks, the revenge trades after a loss, the trades based on hope or boredom, any low probability setup that doesn't actually fit your tested plan.
Get rid of the noise.
Yeah, exactly. Every trade needs to be a deliberate, well thought out execution of your strategy, a precise step. You know, platforms like IUX give you all the tools you need to execute basically any strategy, from slow swing trades to rapid scalping.
Right, the tech is there.
But that internal discipline, that commitment to your definition of quality for every single trade, that, my friend, has to come from you.
Wow, okay. That completely reframes the question. It's not about choosing how much you trade, but how well you execute each trade you do decide to take.
Precisely.
So it boils down to being relentlessly intentional, super disciplined with every single move, whether it's aiming for a big win or a tiny one, not just chasing a number or some ideal of activity or patience.
Yeah.
That's powerful. Makes the path forward feel much clearer.
Absolutely. It really is all about that intentionality. So just to wrap up our deep dive today,
Free cat.
quality over quantity in trading. It's not about the number count. It's about the discipline and the strict alignment of every single trade with your plan.
Your plan, your rules.
Whether you find you're more of a patient sniper or a busy statistical trader, the real quality comes from sticking to your chosen method.
And that leaves us with a thought, maybe a challenge for you, our listener.
Go for it.
What kind of trader are you discovering you are? And maybe more importantly, how does your current trading frequency, the number of trades you're making, really align with your goals and your personal discipline? Yeah. It's definitely something worth thinking about, maybe even journaling about.
Great point. And remember, tomorrow might be too late. Subscribe and share this deep dive right now. If you want to follow up, get more information, you can find IUX Education online.
Yep, we've got learning materials, plenty of articles, and more deep dives like this one for all traders, wherever you are on your journey. We're here to help.
And don't forget, we'll see you again soon.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.